In today's FX markets, let's take a look at the Euro futures as they're moving lower today. Euro futures coming off a nearly 2-month closing high in the previous session to give up some ground today, staircasing lower throughout the session as well. Currently priced just below the 1.047 level, down just under 0.5% on the day. But it has maintained selling pressure throughout the session to start this week. And when you look at the driving factors today, a couple of things influencing the market. Number one, global trade tensions continue to remain elevated. Some dialogue over the weekend causing some concerns, at least short term, once again, as we start this week. Couple that with higher yields here in the U.S. Treasury yields moving higher pretty much across the yield curve today. That's helping, at least to short term, to support the U.S. dollar. It appears to be that's one of the primary mechanisms supporting the U.S. dollar, and therefore we're seeing some selling pressure in most of the major FX futures markets today. Now, looking at the euro overall, the euro is coming off a 4-day higher close cycle as we did move up towards the highest level of the last 2 months and closing just shy of that closing high about a month ago, but nonetheless at the top end of the range, even though we're giving up a little ground today. And overall, the FX futures markets are lower across the board. The euro experiencing some of the heaviest selling pressure, but we're also seeing the British pound slightly lower and the Japanese yen lower. And the other interesting dynamic today is the Australian dollar. Now, it is lower on the session, although just down slightly. But the RBA did choose to cut rates in their meeting decision in the last day or so. And it's not having too significant of an impact on the Aussie dollar at this point. So I guess it was heavily priced in that the RBA might be cutting in this most recent meeting, and therefore they did. And again, overall, it doesn't appear to have too much of an impact outside of the fact that the general selling pressure we are experiencing in most of the major FX futures markets in today's price action.